You know that feeling when you're staring at a stock chart and it just looks like a bunch of chaotic, unpredictable noise? The lines go up, the lines go down. But what if I told you it's not random at all? What if it's actually a language, a secret conversation happening right there on your screen?
I mean, it's the question we've all asked ourselves, right? Is this whole thing just a big casino, a roll of the dice driven by the latest news headline? It sure can feel that way, especially when you find yourself on the wrong side of a trade.
Well, let's just get right into it. The truth is, there is a story being told. The pros, the folks who do this for a living, they're not just guessing, they're reading that story. And today, we're going to start learning the alphabet of their language.
So, to really get this, you have to understand that there are two competing narratives playing out every single day. There's the story that the public hears and reacts to, and then there's the story that the money actually follows. And this quote right here, it just nails the core of the problem. Our instincts, to chase the crowd when things look amazing and to panic and run when things look terrible, those instincts are the absolute worst things to follow in the market. We are literally wired to buy high out of greed and sell low out of fear.
Look at this comparison. It lays it all out. The novice mindset is totally reactive. Good news comes out, they buy. The price is flying high, they chase it. But the professional? They're doing the exact opposite. They're hunting for those moments of extreme emotion, the panic, the euphoria, because that is where the biggest opportunities are hiding.
And that reactive, emotional way of thinking, well, it's a trap. And it's a trap that's designed almost perfectly to move money from the accounts of the crowd into the accounts of the pros.
So let's be clear about who we're talking about here. We call them smart money. And no, this isn't some secret club of villains. It's just the big players, the institutions with tons of capital. They operate on the simple, fundamental laws of supply and demand. And because they're so big,
they can't hide what they're doing. Every single move they make leaves behind footprints. And these footprints are made up of two critical clues that anyone, and I mean anyone, can learn to spot.
all right, so how do we find these footprints? Let's get into the nitty-gritty, the actual method for decoding what the big players are up to. The tool we use is called volume price analysis, or VPA, and I love this analogy, thinking of it as the market's DNA. Price and volume are the two fundamental building blocks of everything that happens. When you analyze them together, you get to see the real story happening underneath the surface.
So if you just look at a normal price chart like this, all it's really telling you is the result. It tells you what happened. The price went up or it went down, but it doesn't tell you why. It doesn't tell you how much conviction was behind that move.
But now, this is where the magic happens. When we add volume, those bars at the bottom, suddenly we get the story behind the price. It tells us about the effort. Was there a huge fight? Was there a ton of energy? Or was nobody even showing up to the party? Volume provides the context.
Okay, so this relationship is everything. It's called effort versus result, and it's just pure logic. Think about it. If you see a ton of effort, that's high volume, and you get a big result, a big price move, that's validation. It means the move is legit. But what if you see a huge effort and the price just doesn't go anywhere? That's a huge warning sign. It means some big player is absorbing all that buying or selling. And maybe the biggest red flag of all, a huge price move with almost no effort, no volume. That's an anomaly. It's a trap.
And once you really get that concept of effort versus result, suddenly, you can start to read the entire language of the market. You can see the smart money's whole game plan unfolding right on the chart. It really boils down to two main phases. First, you've got accumulation. Think of this as buying at wholesale. After a big price drop, everyone is panicking and selling. The smart money steps in and quietly buys everything they can. You'll see huge volume, but the price stops going down. Then you have distribution. That's selling at retail. After a long rally, everyone is euphoric and jumping in. The smart money sells all the shares they bought cheap to this excited crowd. Again, you'll see high volume, but the price just can't seem to push any higher.
And check this out. Here's what it looks like in the wild. You see that long downtrend? Price goes sideways, and then, bam, that gigantic spike in volume. That is not an accident. That is the footprint of smart money buying up tons of shares from all the sellers who are giving up. It's the telltale sign that a big move up is probably coming.
So you see, this isn't some kind of one-off trick. This is a repeatable business plan. It's how the largest players operate. They buy low from the fearful and they sell high to the greedy. It's that simple.
And all of this leads us to what might be the single most important shift in thinking you can possibly make as a trader. You have to learn to trade what you see on the chart, the cold, hard evidence of price and volume, not what you believe should happen based on the news or your gut or what some guru told you.
At the end of the day, what does this really mean for you? It means learning to trust the raw data of the market itself over all the stories, opinions, and noise that are constantly trying to distract you.
So the next time you pull up a chart, you've got a choice. Are you going to follow the crowd, chasing the price and reacting to the headlines like everyone else? Or are you going to ignore the noise, look for the clues in the volume, and follow the footprints? The choice is yours.